Yes, people, good morning, good afternoon, good evening to all South India student. How are you? Hope so you are good. I am also good. So guys, today we are starting with the revision lecture applicable for your examination, that is May and November 2025 examination. So guys, for your examination, as you are aware that Finance Act 2024 is applicable, and in Finance Act 2024 there are two Finance Act, because two Finance Act, one was before election and second was after election. So there are two Finance Act that is applicable for your examination. But guys, in the Finance Number 1 Act that was introduced, Finance Bill was introduced by Nirmala Sitharaman ji as on 1st Feb 2024. In that particular bill, there was no such amendment. But guys, that second Finance Bill that was introduced by Nirmala Sitharaman ji as on the 23rd of July 2024, and in this particular bill there are lots of amendments. And guys, this bill became the Finance Act number 2 2024 on the 16th August 2024. That is applicable for your examination. So guys, let's start directly with the tax rate applicable for your examination. So for your examination, your assessment year is 25-26, previous year is 24-25. So previous year is 24-25, assessment year is 25-26. So guys, basically there are two type of the tax rate. One is the general tax rate and one is the special tax rate. Now, general tax rate is basically your slab rate and all, that is called general tax rate. Special tax rate is like long-term capital gain is taxable at the rate 20%. Now. But now guys, from 23rd July 2024, it is taxable only at the rate 12.5%. So here guys, this is called your special tax rate. Special tax rate are given in the Income Tax Act 1961. Special tax rate are given in the Income Tax Act, and guys, general tax rate are always given in the Finance Act. So if anyone asks you guys where tax rate is given, so guys, special tax rate like winning is taxable at the rate 30%, short-term capital gain 111A from the share market, it is taxable at 15%. Now it is taxable at 20%. Where it is given? It is given in your income. It is given in your Income Tax Act 1961. But whatever the slab rate and all now, that is given in the like Finance Act 2024. So let's start with the general tax rate. So guys, for your examination, your general tax rate, there is no change for this year. So what is the tax rate? So in case of the individual HUF, AOP, BOI, artificial juridical person. Now, in case of individual HUF, AOP, BOI, artificial juridical person, whether that person is a resident or non-resident, guys, normal tax rate is up to 2,50,000. There is no tax, that is called your basic exemption. And in the Bear Act, it is written as, in the law, it is written as maximum amount which is not chargeable to tax. That is your basic exemption. So 2,50,000, there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. But guys, if there is any individual who is a senior citizen, in the previous year, means senior citizen means a person who completed the age of the 60 years or more in the previous year. That individual person, and guys, that person should be a resident. Means only resident individual can be a senior citizen. Suppose for an example, there is one person, Mr. Lobo. He is in USA. His age is 72 years. Is that person will be treated as senior citizen? Answer is no. So senior citizen means that person is a resident individual, age 60 years or more in the previous year, but less than 80 years. That is called your senior citizen. In case of senior citizen, guys, up to 3 lakh, there is no tax. 3 lakh is your basic exemption. Now 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. Now in case of the super senior citizen means resident individual, age 80 years or more in your previous year. Your previous year is a previous year 24-25. So in this previous year, if any person has attained the age of the 80 years or more, that is called super senior citizen. In case of super senior citizen, guys, your net taxable income is up to 5 lakh. That is the basic exemption. There is no tax. Now 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. Now remember here there is no 5% tax rate. Here directly it is a 20% and 30%. But in these two cases, were 5% also a slab rate. So here guys, we have discussed that what is the basic tax rate or general tax rate for the individual HUF, AOP, BOI, artificial juridical person. Up to 2,50,000, there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. Now in case of the senior citizen, up to 3 lakh, there is no tax. 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. Now in case of the super senior citizen, up to 5 lakh, there is no tax. 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. Now guys, remember, I am saying that if any person is a senior citizen or super senior citizen, means that person has attained or completed the age of the 60 year or 80 years or more in the previous year. Now guys, for your examination, your previous year is 24-25. And previous year 24-25 means it's start from 1st April 2025 and completed by 31st March 2025. start from 1st April 2024 and completed by 31st March 2025. Now remember, if any person completed the age of the 60 years in this particular period, that person is a senior citizen. Now there is a one catch. Okay, suppose for an example, if any person is celebrating his 60th birthday on the 1st April 2025, 1st April 2025 means after this particular period, if any person is celebrating his 60th birthday, then lawmaker says that when you are celebrating your 60th birthday on 1/4/2025, then also it is assumed that you have completed the particular age of the 60 years as on 31st March 2025 only, and you can claim the higher basic exemption benefit of the 3 lakh. So guys, remember, if any person is celebrating his 60th birthday or 80th birthday on the 1st April 2025, then also he can claim the higher basic exemption for the previous year 24-25 because he has completed the age of 60 years or 80 years as on 31st March 2025 only. Now guys, next part is related to the surcharge. Sir, question is that is surcharge is applicable for individual, HUF, AOP, BOI, artificial juridical person? Answer is yes. But guys, if your net taxable income is up to 50 lakh, then there is no surcharge. But net taxable income is more than 50 lakh up to 1 crore, then 10% is surcharge, means on the tax you have to add the extra 10% is surcharge. So whatever the tax plus add 10%, that is the surcharge. But suppose if your net taxable income is more than 1 crore up to 2 crore rupees, then surcharge is 15%. If your net taxable income is more than 2 crore up to 5 crore, then surcharge is 25%. And guys, if your net taxable income is more than 5 crore, then surcharge is 37% is surcharge. So what I have mentioned can normally, if your income is up to 50 lakh rupees, income is net taxable income after claiming all the deduction and all. So if your net taxable income is up to 50 lakh, there is no surcharge. More than 50 lakh up to 1 crore, 10% surcharge. 1 crore to 2 crore, 15% surcharge. More than 2 crore up to 5 crore, 25% surcharge. And more than 5 crore, then 37% is surcharge. But guys, remember, here a lawmaker says that in case of this 4 special type of income, now which 4 special type of income? Try to understand. Guys, one is the income from the share market. Remember, income from share market. Income from share market means either there is a long-term capital gain under section 112A. This long-term capital gain is on the listed shares or equity-oriented mutual fund or units of business trust. Or suppose if there is a short-term capital gain under section 111A, that is short-term capital gain on listed share, equity-oriented fund and business trust unit, or guys, dividend. So can I say that this 3 income is from the share market only? Long-term capital gain from share market, short-term capital gain 111A from the share market, or dividend income. And guys, 4th is any other type of long-term capital gain that is taxable under section 112. That is long-term capital gain on house property or jewelry or gold and all. That is other long-term unlisted share and all. That is long-term capital gain under section 112. Now guys, remember, what are the tax rate on this income? Guys, from this year, you know that capital gain tax rate is changed. You know that earlier your long-term capital gain 112A, your tax rate was the 10% in excess of 1 lakh rupees. In excess of 1 lakh rupees, 10%. Now this year they have changed. And lawmaker says that can now tax rate on the long-term capital gain under section 112A up to 22nd July 2024. It is a 10%. But guys, with effect from 23rd July 2024, that is the date of the budget. So with effect from 23rd July 2024, this tax rate of 10% is raised to the 12.5%. So 12.5% is now tax rate on the equity share, equity oriented mutual fund or unit of business trust, STT paid and all. So guys, 12.5%, but in excess of the 1,25,000. So you know that last year there was up to 1 lakh rupees, there was no tax, but now it is up to 1,25,000, there is no tax. And this 1,25,000 limit is applicable for whole year. This 1,25,000 limit is applicable for whole year. So before 23rd July or after 23rd July, whatever your total long-term capital gain, now up to 1,25,000, there is no tax. In excess of 1,25,000, it is taxable at the rate 10% before that, and on or after 23rd July 2024, it is at 12.5%. Now guys, short-term capital gain 111A, earlier it was taxable at the rate 15%, but with effect from 23rd July 2024, it is taxable at the rate 20%. Now dividend is basically taxable as per slab rate only. There is no change in dividend. But guys, long term capital gain 112, earlier you know that it is taxable at the rate 20%, but now it is taxable at the rate 12.5%. So there is a benefit because it is taxable only at the rate 12.5%. But guys, they have, like, you know, that they took the benefit of indexation. Now indexation is not available from 23rd July 2024. That we will discuss in the capital gain topic. And guys, for you, I have already uploaded the amendment lecture number 1. And in amendment lecture number 1, I have clarified everything. I have explained about you the indexation and what government did the cheating, how government did the cheating. Everything I have explained you in that amendment lecture number 1. So here guys, this is the tax rate. Now guys, long-term capital gain 112A is taxable. Earlier it was 10%. Now it is at 12.5% in excess of 1,25,000. Short-term capital gain 111 is taxable at the rate 20%. Dividend taxable as per slab rate only. And guys, LTCG 112, now it is taxable at 20.5% with effect from 23rd July 2024. This income, I will call it special income. So guys, in case of this special income, obviously this is the tax rate. But remember, on this special income, whatever the level of the income, your maximum surcharge can be the 15%. Means whatever the tax on this special income, you will calculate the tax, and on that tax, your maximum surcharge can be the 15%. Because earlier what I have explained, if your income is more than 2 crore up to 5 crore, then surcharge is 25%. If your income is more than 5 crore, surcharge is 37%. But don't worry guys, this tax on this income will not hit by the surcharge of 25% or 37%. Maximum surcharge will be the 15%. Now, how to remember this, how to understand this, just guys focus here, you will able to understand. So guys, suppose your total income is your special income, this 4 income, LTCG 112A, STCG 111A, dividend and LTCG 112. This is called special income. So this special income and other income both together, if your total income is up to 50 lakh rupees, then obviously there is no surcharge. If your total income, including special income and other income, it is more than 50 lakh up to 1 crore, then surcharge is 10%. If your total income, that is special income and other income, it is more than 1 crore up to 2 crore, then surcharge is 15%. So till 15%, there is no need to change anything. Means there is no change. Because your total income up to 50 lakh, there is no surcharge. More than 50 lakh up to 1 crore, 10% surcharge. More than 1 crore up to 2 crore, 15% surcharge. But now you have to check that, suppose if your total income is more than 2 crore, total income is special income as well as other income, if it is more than 2 crore. If it is more than 2 crore, then always remember on the special income tax, means special income, that LTCG 112A, 112, STCG 111A and dividend, whatever tax calculated on this income, your surcharge will be the 15%. Maximum surcharge is 15%. Now you have to check that, because here your total income is more than 2 crore. Total income is special income and other income. So tax on special income, on that surcharge is 15%. But guys, what about the balance tax? So guys, whatever the tax on balance income, if your balance income is within the limit of the 2 crore, your total income is more than 2 crore. But suppose if you remove the special income, then your balance income is within the limit of 2 crore. Then tax on balance income you will calculate on that surcharge is only 15%. But suppose balance income itself is more than 2 crore up to 5 crore, then surcharge on tax on balance income is 25%. And guys, if your balance income is more than 5 crore itself, then guys, surcharge on tax on that balance income is 37%. So hope you understood. If you write this then it will be very easy to understand. And after that, you can do certain question from the compiler. So guys, in this particular case, do one thing, whatever question is given, one is this example is given, just do that example. And after that, certain question also given, that do that question. So you will able to understand. So this is all about the tax rate in case of individual, HUF, AOP, BOI, artificial juridical person. Now guys, next part is a tax rate for the company. So there are two type of the company. One is the domestic company and one is the foreign company. So remember, in case of domestic company, your tax rate is a 30%. But for domestic company, for previous year 22-23, turnover is up to 400 crore. Now you are calculating tax for the previous year 24-25, but if previous year 22-23 turnover is within the limit of 400 crore, then that domestic company tax rate is 25%. Now you may ask, sir, why we are checking the turnover of previous year 22-23? I already explained you in the regular batch and exam oriented batch why we consider the turnover of previous year 22-23. So previous year 22-23 turnover of that domestic company is within the limit of 400 crore, then tax rate is 25%, otherwise tax rate is 30%. Now guys, There may be doubt, because sir, suppose if company is newly incorporated, then suppose that domestic company is incorporated in the current year or in the last year only, then what will happen? Is the benefit of 25% is applicable or not? Right answer is yes, it is applicable. So if company is a newly incorporated company, means incorporated in the current year or in the last year, then guys, that company can claim the benefit of this 25%. There is no issue at all. This 25% benefit is available to that particular company because ICI has given one question in the mock test paper in the last year and they claim the benefit of 25%. So we will go with the ICI conclusion and we can claim the benefit of 25% if company is newly incorporated. Now next part is in case of foreign company. Guys, in case of foreign company, earlier tax rate was 40%. But from this year, there is a change and this tax rate is a 35%. Now in case of company, sir, this is the tax rate, but sir, is surcharge is applicable? Answer is yes. Surcharge is applicable if total income, or I can say that net taxable income, is more than 1 crore up to 10 crore. Then in case of domestic company, that surcharge is 7%, and if total income more than 10 crore, then surcharge is 12%. Now, in case of the foreign company, guys, that surcharge is 2% and 5% instead of 7% and 12%. Now, in case of foreign company, surcharge is lower because in case of foreign company, the tax rate is higher. That's why surcharge is lower. So, what is the surcharge rate? In case of the domestic company, if your total income more than 1 crore up to 10 crore, then surcharge is 7%. More than 10 crore, then surcharge is 12%. In case of foreign company, it is 2% and 5%. Now, next part is related to in case of the partnership firm, LLP and local authority. Now guys, in case of partnership firm, LLP and local authority, your tax rate is a 30%. Your tax rate is a flat 30%. Surcharge is applicable at the rate 12% if total income is more than 1 crore. So if total income is more than 1 crore, then surcharge is applicable at the rate 12%. Now in case of the cooperative society, your tax rate is a slab rate. Now a very small slab rate. Little slab rate. And here slab rate is in case of cooperative society, if your total income is up to 10,000, then slab tax rate is 10%. If it is more than 10,000 up to 20,000, then tax rate is 20%. More than 20,000, then tax rate is a 30%. But don't worry, for the cooperative society, there is a one special tax regime also. That is the 115 BAD and BAE that we will explain today only in the later part. Now guys, in case of cooperative society, the surcharge is applicable like a domestic company. Means if your income is more than 1 crore up to 10 crore, then surcharge is 7%. Income is more than 10 crore, then surcharge is 12%. Now guys, in case of all the SSC, that health and education cess is applicable at the rate 4% on the tax, including surcharge if any. So health and education cess is always applicable on the tax plus surcharge. Tax plus surcharge, and on that health and education cess is applicable at the rate 4%. Now guys, always remember, whatever your net tax liability as well as your net taxable income, that has to be rounded up in the nearest rupees of the 10. Nearest rupees of the 10 means, suppose if it is a 1, 2, 3, 4, then lower 10, 5, 6, 7, 8, 9, then the upper 10. In that way, you have to round it up. After that, guys, here there are certain example. You have to do this example related to the capital gain, how its surcharge is applicable and all. These are very interesting example, very good example. And here I have taken the example of the new tax rate, new slab rate, because on or after 23rd July 2024, if it is transfer, then what is the tax rate? Before transfer, then what is the tax rate? You will able to understand this. Okay. So this is the example number 1, 2, 3, and after that there are this example for your test yourself. You just do that, you will able to understand. Now guys, next part is related to the marginal relief in case of the surcharge. So wherever surcharge is applicable now and your income is little bit more than that surcharge limit, then you have to check the marginal relief, because many times what happen, your increase in tax is higher than increase in income. Means your increase in tax is the higher than increase in income due to the surcharge. And here lawmaker will give you the marginal relief. I can take an example. Suppose for an example, guys, there is a one company, name is a Sri Limited, a Indian company. Now this Indian company income is a 1 crore 1 lakh, and that Indian company previous year 22-23 turnover was 450 crore. It means current year tax rate is a 30%. Assessee not opted 115 bar, calculate tax liability. So guys, if your income is 1 crore 1 lakh and if you multiply by 30%, then tax is a 30 lakh 30,000. Is surcharge is applicable or not? Answer is yes, surcharge is applicable, because income is more than 1 crore in case of company, then surcharge is applicable at the rate 7% now. So here surcharge is applicable at the rate 7%. So just add the surcharge 7%, that is 2,12,100. So 2,12,100 surcharge. So here including surcharge, your tax is a 32,42,100. Now guys, there is a cheating now. Because suppose in case of this company, if their income is only 1 crore, here income is 1 crore 1 lakh. But suppose income is only 1 crore, then can I say that their tax liability is only 30 lakh rupees? their tax liability is only 30 lakh rupees. If their income is only 1 crore, then guys, their tax liability is only 30 lakh rupees. Tax liability is only 30 lakh rupees. There is no surcharge. Now, assessee says that we made the mistake. Because if we earn the 1 crore, then our tax liability is 30 lakh. Here we have earned 1 crore 1 lakh. Our tax liability is 32 lakh 42,100. Means here increase in the income. If you see, increase in the income is by 1 lakh. And guys, due to that, increase in the taxes is 2,42,100. Because if over 1 crore, increase in the income is a 1 lakh, and due to that, your increase in the taxes is a 2,42,100. That is not good. Now, lawmaker says that don't worry, we will give you the marginal relief. In this particular case, you will get the marginal relief, and Nirmala Sitharaman ji says that don't worry, your increase in the income is a 1 lakh na, so we will take only 1 lakh. We will not take the 2,42,100. It means we will give you the 1,42,100 marginal relief. Now, guys, in the examination, what you have to do? Whenever your income is little bit more than 1 crore or 10 crore in case of company. In case of the individual HUF, AOP, BOI, artificial juridical person, your income is little bit more than the 50 lakh or 1 crore or 2 crore or 5 crore. Because 50 lakh, more than 50 lakh, then surcharge is applicable first time. But at the 1 crore, 2 crore, 5 crore, surcharge rate is changed. So you have to check the marginal relief. In case of partnership firm, your income is little bit more than 1 crore. Then guys, you have to check the margin relief concept. So here lawmaker says that what you have to do in the examination, suppose your income is little bit more than here 1 crore, 1 lakh. So first calculate the tax, after that add the surcharge. And after adding surcharge, in the next line, just write this. Okay, the above amount, this amount 32,42,100 is restricted to the tax on 1 crore. Means suppose our income was only 1 crore, then what could be the tax? So tax on 1 crore plus NTI minus 1 crore. Means whatever the income over 1 crore, just give it to the Nirmala Sitharaman ji. So this amount is restricted to the tax on 1 crore plus NTI minus 1 crore. So if your income is only 1 crore, then your tax is a 30 lakh. What is your income over 1 crore? Means NTI minus 1 crore is a 1 lakh. So 31 lakh. Just take this 31 lakh. And guys, I am saying that this amount 32 lakh 42,100 is restricted to 31 lakh. It means whichever is lower, you have to continue. Just continue whichever is lower, automatically you will get the amount of the marginal relief. And here marginal relief is a 1,42,100. And after that, just add the health and education cess. So guys, what you will do? Okay, in case of individual HUF, AOP, BOI, artificial juridical person, if your income is little bit more than the 50 lakh, 1 crore, 2 crore, 5 crore, or in case of company, if it is little bit more than 1 crore or 10 crore, or in case of the partnership firm, it is little bit more than 1 crore, then guys, what you will do? First calculate the tax, add the surcharge, and after that just write okay, whatever amount comes now, this amount is restricted to tax on 50 lakh or 1 crore or 2 crore or 5 crore or 10 crore, or plus NTI minus 50 lakh, 1 crore, 2 crore, 5 crore, 10 crore. And guys, that excess income just give to the Nirmala Sitharaman ji. Whichever is lower, you have to continue. Automatically you will get the marginal relief. Like in this second example, suppose there is a one company, that company income is at 10 crore 2 lakh 30,000. Now just calculate the tax on 10 crore 2 lakh 30,000, add the surcharge, because surcharge is 12% in case of company if income is more than 10 crore. Now guys, after adding the surcharge, just write that this amount is restricted to the tax on 10 crore. Means if your income is only 10 crore, then what could be the tax? So tax on 10 crore plus NTI minus 10 crore. So tax on 10 crore plus NTI minus 10 crore. And guys, whatever amount comes now, whichever is lower, you have to continue. Automatically you will get the marginal relief. Because here income was little bit more than the 10 crore now. So you will calculate the tax on 10 crore plus NTI minus 10 crore. But guys, when you calculate the tax on 10 crore now, then you have to add at least surcharge 7% now. Because if your income is only 10 crore, then guys, tax is a 25%. Here is a 2 lakh crore 50 lakh, 2 crore 50 lakh. But surcharge of 7% is applicable now. So just add here surcharge of 7%. And after that, just give the excess income to the Nirmala Sitharaman ji and take here whichever is lower will be treated as your marginal. Whichever is lower, you have to continue. And that difference will be called as your marginal relief. You got my point or not? Yes. Now example number 3 is related to the same. And guys, he is having income of more than 1 crore. So what you will do? First, calculate the tax, add the surcharge of 15%. After that, just write that this amount is restricted to tax on 1 crore plus additional income over 1 crore. Now, suppose if anyone income is a more than 2 crore here, Krishiv is having income of 2 crore 4 lakh 40,000. So what you will do? The tax on 2 crore First, you will calculate the tax, add the surcharge. After that, just write this amount is restricted to tax on 2 crore plus income over 2 crore, that is NTI minus 2 crore. And whichever is lower, you will continue, so automatically you will get the marginal relief. You got my point or not? Yes. Now, next part is related to the rebate from tax of certain individual. Guys, there is one rebate 87A. Now, this 87A rebate is available only to the resident individual. So if any person is a resident individual and having his total income is up to 5 lakh, means resident individual having income is up to 5 lakh rupees, then guys, rebate is available at 100% of tax or 12,500, whichever is lower. So in the practical life, we always say is that if your income is up to 5 lakh, then there is no need to pay the tax. Because here this rebate is available that 100% of the tax payable or 12,500, whichever is lower. But remember, this rebate is available only to the resident individual is having the net taxable income is up to 5 lakh. Now there is a one example, suppose in case of the Sneha, here tax liability, suppose total income is 4,40,000 and 4,40,000, if you calculate the tax by slab rate, then guys 9,500, total 9,500 is your rebate. So net tax liability is a nil. Now suppose in case of Sneha, your total income is a 5,07,000. Now income is a 5,07,000. So you have to calculate the tax on 5,07,000 by slab rate. So here tax comes to the 13,900. Is rebate is available? Answer is no, babu. Here rebate is not available because rebate is available only if your net taxable income is up to 5 lakh. And here net taxable income is a 5,07,000. So that net taxable income is more than 5 lakh. Nah. So net taxable income is more than 5 lakh. So this particular rebate is not available. And guys, due to that, you have to pay the tax of 14,456. Sir, this is cheating now, because if our income is only up to 5 lakh, then there is a rebate is available and due to that tax is a nil. But here we have earned the extra 7,000 and due to that there is a tax of 14,456. Sir, is there is any marginal relief in case of the rebate? Answer is no, that marginal relief here is not available. But guys, if you follow the 115 BAC, then certain marginal relief is available that we will discuss with the 115 BAC. And under section 87A, there is a change. If you follow the 115 BAC, then instead of the 12,500, there is a 25,000 and instead of the 5 lakh, there is a 7 lakh, means up to 7 lakh, there is no need to pay the tax if you follow the 115 BAC. Okay, guys. Now, this rebate under section 87A is available against any type of the income. Any type of the income and tax, this rebate is available. But guys, remember, it is not available against 112A long-term capital gain. Because under section 112A long-term capital gain, anyway, there is a 1,25,000 exemption. Because in excess of 1,25,000 only, it is taxable at the rate 10% or 12.5%. So guys, here what I am saying that this rebate is not available against the tax under section 112A. You got my point or not? Yes. Now we are going to start with the alternative taxation regime. Alternative taxation regime. Now guys, alternative taxation regime and alternative taxation regime. First section is 115BAA. 115BAA, you can say that 115BA. So 115BA, this particular section says that in case of the domestic company. Now guys, domestic company include any type of company, like manufacturing, non-manufacturing, service provider company, new company, old company, any company. Now, any domestic company has an option that they can pay the taxes at the rate 22%. Now, wow, because normal tax rate is 25%, 30%. Here, tax rate is only 22%. But question is that, is this 22% is a final tax rate? Or it is a base tax rate? Right answer is, guys, this 22% tax rate will be increased by the 10% of the surcharge. Now, sir, surcharge to depends on the total income, na? But guys, here surcharge is always means irrespective of your total income, even your total income of 100 rupees, then also surcharge is applicable 10%. Answer is yes. And health and education cess is applicable at the rate 4%. So I can say that your effective tax rate will be the 25.168%. So in case of the domestic company, if domestic company opting 115BAA, then your tax rate is 22% plus 10% plus 4%. Effective tax rate is 25.168%. But question is that, sir, what about the other income? Like suppose that domestic company is having income from house property or other sources and all, that also taxable at the rate 22% only. Means other income is also taxable at the rate 22% only. Effective tax rate is 25.168%. But what about the special rates of income? Because normally long-term capital gain 112 taxable at the rate 10%, short-term capital gain 111 taxable at the rate 15%, winning income taxable at 30%, long-term capital gain taxable at the rate 20%. What about the special rates of income tax? Guys, special rates of income is taxable as per special rates only. But always remember, here you have to add the 10% surcharge and 4% health and education cess. So suppose if there is a short-term capital gain 111, then your tax rate will be the 15% plus 10% plus 4% will be your final tax rate. You got my point or not? Yes. But guys, one more benefit. If company is opting 115BAA, then company is not required to pay the MAT. MAT is not applicable. Minimum alternate tax is not applicable. But sir, what about the brought forward MAT credit? Because you know that MAT credit can be carried forward for the 15 assessment year. What about the MAT credit? Guys, MAT credit will be lapse. Because when MAT is not applicable, then what about the MAT credit? If MAT is not applicable, then what about the MAT credit? MAT credit will be going to lapse. Now, when government is giving so much benefit, tax rate is only 22% instead of 25 or 30%, then government has asked you to surrender something. So there are some benefit which you have to forego, which you have to leave that benefit. Now what you have to leave? First is company cannot claim the 10AA deduction. 10AA is a SEZ. You know that 15-year deduction is available for the SEZ unit. First 5 year 100% of export profit, second 5 year 50% of export profit, third 5 year 50% of export profit or SEZ reinvestment reserve, whichever is lower. So guys, that 10AA deduction is not available. One is the additional depreciation is not available, means that company cannot claim the additional depreciation. Third is a 33AB and 33ABA deduction is not available. In PGBP, if you remember 33AB, the Tea Coffee Rubber Development Board, and you have to deposit some amount in the NABARD, or in 33ABA site restoration account, so that deduction is not available. After that, under scientific research, that 3512, 3512A, 3513, 352AA and 352AB deduction is not available. These sections are basically related to the donation to the others in the scientific research. Guys, if you remember, I have mentioned that like donation to Rajni ICU. Rajni ICU means Research Association, Institute, College, University. If you made donation for scientific research or social statistical research, or donation made to the IIT National Laboratory, or donation made to the any Indian company engaged in the scientific research, then deduction was available 100%. Guys, this deduction is not available if SSC opting 115BA. But guys, remember, here they mention about this section only. But guys, suppose if there is an in-house research, then deduction under section 3511 and 3514 is available. 3511 and 3514 is related to the scientific research for in-house research, means revenue expenditure and capital expenditure for your own scientific research related to your business. Then deduction is still available, even you are claiming the 115BA benefit. But guys, donation related benefits is not available. Next is 35AD deduction is not available. 35AD, that 14 specified business, cold chain facility warehousing for like agriculture produce, petroleum, natural gas pipeline, hotel, hospital, slurry pipeline and all, that is 35AD. Specified business, that deduction is not available. After that, 35CCC and 35CCD is not available. 35CCC is related to the agriculture extension project and CCD is related to the skill development project. These deductions are not available. After that, any deduction under chapter 6A is not available. Any deduction under chapter 6A means 80G is not available, 80GGA is not available, 80GGB is not available, 80GGC is not available, 80QQB, RRB and all any deduction under chapter 6A is not available except 3 is available. One is the 80JJAA is available. 80JJAA is like in the current year, if you recruited the new employee, then whatever the emoluments paid through to the new employee, 30% deduction is available. So 80JJAA is available. 80LA is available. 80LA means, suppose if your company is located in the International Financial Service Center at Gandhinagar, Gujarat, near to Ahmedabad, first IFSC, then you know that 10 year there is no need to pay the taxes, so that deduction is still available. And 80M is available. 80M is related to the intercorporate dividend. Suppose any domestic company receive dividend from another domestic company or foreign company or business trust, and they distribute the dividend in current year up to the due date of return filing, means 1 month before the due date of return filing, then guys, whatever dividend received and dividend distributed, whichever is lower is deduction under section 80M, that is intercorporate dividend. So this 3 deduction is available. Other than this 3 deduction, any other deduction under chapter 6 is not available. Now one more point, lawmaker says that suppose in your brought forward losses or in your unabsorbed depreciation, if there is any loss or a depreciation due to this section, then that loss you cannot set off, that depreciation you cannot set off, it is going to be lapse. So in simple word, if your brought forward losses, suppose in your brought forward losses there is a loss due to section 35 AD business, or in your unabsorbed depreciation there is a like depreciation related to the additional depreciation, then now you cannot set off that, it is going to be lapse. Now one more point guys, this section is not mandatory. If company wants to opt this section, then company has to file one form, that is form number 10 IC up to the due date of return filing. Up to the due date of return filing, company has to file one form, that is 10 IC up to the due date of return filing, then company will opt this section. But once this section is opted now, then this section is applicable for the like remaining years also. So for the next year also company has to opt this section. So once this option is exercised, it is applicable for subsequent years also. But guys, here one point says that suppose in the subsequent year, if there is any violation, means company made any violation and suppose company not followed this condition, and they claim any deduction, then company will be come out from 115BAA from that year, and again they cannot opt the 115BAA. Again they cannot opt the 115BAA. You got my point or not? Yes, this is the section 115BAA. Now next section is 115BAB, 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 115BAB. Now guys, this section is applicable if new domestic manufacturing company. Here company should be the new. Guys, that 115BAA was for the all type of the domestic company, old, new, manufacturing, non-manufacturing. But guys, this section 115BAB is applicable only for the manufacturing and new domestic company. Now, new domestic company means that company should be set up and registered on or after 1st October 2019, and that manufacturing business should be commenced till 31st March 2024. So company should be set up and registered on or after 1st October 2019, and company should have started the manufacturing business till 31st March 2024. And guys, if company opting this section now, then tax rate is only 15%. Only 15% is tax rate. Now question is that is 15% is final tax rate? Answer is no. In this 15% tax rate, you have to add the 10% surcharge and 4% health and education cess. So effective tax rate will be your 17.16%. Your 17.16% will be the effective tax rate. I will tell always 15%, but always you have to add the 10% surcharge and 4% health and education cess. Now, sir, you are saying that tax rate is only 15%. Answer is yes. But guys, this 15% tax rate is applicable only on income from your manufacturing business. Huh? Suppose that company is having any other income, then what will be the tax rate, like house property income, other sources income? Then guys, for the house property income or other sources income and all, your tax rate will be the 22% instead of 15%. For the house property income, other sources income, your tax rate is at 22% instead of the 15% plus 10% surcharge, 4% health and education cess. But there is a one antica point. Try to understand. In house property income or other sources income, your gross income is going to be taxable. Means any deduction or allowances is not allowed. You know that under house property, there is a 30% standard deduction that is not allowed. Or interest on loan deduction under section 24B, that is not allowed. So your gross income is going to be taxable at the rate 22%. But sir, what about the special rates of income? So guys, special rates of income will be taxable as per special rates only. Just add the 10% surcharge and 4% health and education cess. Now, what about the normal short-term capital gain? Normal short-term capital gain, here two type of the short-term capital gain. Normally, you know that there are two type of short-term capital gain. One is the 111A. 111A is a 15%. That is your, you can say, special rates of income. So special rates of income is taxable as per special rates. But guys, if there is a other short-term capital gain, then lawmaker says that is that short-term capital gain is due to the depreciable asset. If that short-term capital gain is due to the depreciable asset, then your tax rate is only 15%. 15% plus 10% plus 4%. Why it is? Because guys, on the depreciable asset, you know that you have claimed the depreciation earlier. And when you claim the depreciation, it means you have saved the PGBP income. Means you have saved the PGBP income, or you can say PGBP taxes you have saved. It means you have saved the 15% taxes here. So now if you are transferring that asset, then you have to pay the tax only at the rate 15%. But suppose if there is a short-term capital gain other than depreciable asset, then guys, tax rate is 22%. So what I am saying that if your manufacturing business income taxable at the rate 15%, other sources house property income taxable at 22%, special rates income taxable as per special rate only. Now short-term capital gain on depreciable asset taxable at 15%, and your short-term capital gain on non-depreciable asset is taxable at the rate 22%. And guys, always you have to add the 4% health and education cess and 10% surcharge. Oh. Now, guys, suppose in case of the company who is opting 115 BAB, suppose they are declaring the super profit, or I can say that extra profit. How it is possible? I can take an example. Suppose I am having one company in the Mumbai and one company I have set up in the Madurai. Now Madurai, I have set up one company. Now Madurai company is suppose opting 115 BAB. I am a common shareholder or same director. So what I did, like Madurai company is paying taxes at the rate 15%, and suppose my Mumbai company is paying taxes at the rate 30%. What I will do? I will just manufacture some goods in the Madurai company and I will transfer to Mumbai company. But what happened? I will change the billing amount. And suppose goods worth of 10 crore, I will sell at 20 crore. So what will happen? In Madurai company, profit will be higher. And in Madurai company, profit will be higher, but their tax rate is only 15%. Na? But in Mumbai company, profit will be lower and I am saving the 30% tax. So effectively, I am making the I am saving the 15% taxes. So guys, people were made doing that type of practice. So lawmaker says that here assessing officer has the power, and assessing officer will calculate the profit of the Madurai company. And if Madurai company is earning the normal profit, then it's okay. But Madurai company is earning the extraordinary profit or super profit, then that super profit or extra profit, government will charge the taxes at the rate 30%. So on that extra profit, here government will charge the taxes at the rate 30% plus 10% surcharge plus 4% health and education cess. Now one more point. Guys, if MAT is not applicable, if company opting 115 BAB, then MAT is not applicable. Now what about the MAT credit? Guys, there is no question of MAT credit, because in the first year only company has to opt this section, because this is for only for new domestic manufacturing companies. So in the first year only company has to opt this section. So there is no question of the MAT credit, because MAT itself is not applicable. Now guys, there are certain conditions. And if these conditions are satisfied, then only company can opt this section. And first condition is company should be set up on or after 1st October 2019, and they should have started the manufacturing business till 31st March 2024. Second condition is company should be new, means business should be new. It should not be split up or reconstruction of your existing business, means you should start the new business. Third condition, whatever plant and machinery required for that business should be new. But there are two exceptional cases. One is out of total plant and machinery, 20% plant and machinery can be second hand. And one more point, if any imported plant and machinery, even that is the second hand, it will be treated as new only for the purpose of this section. So what third condition says that all plant and machinery should be new. But there are two exceptional cases. One is out of the total plant and machinery, 20% can be second hand. And second is the imported plant and machinery will be treated as new only for the purpose of this section. Now, point number 4 says that this company cannot use any hotel or convention center. Means earlier it was used as hotel or convention center, and now that building is using for this business, that is not possible. So what I am saying that this company cannot use any building which was previously used at hotel or convention center. Now, fifth condition is that company should be engaged only in the manufacturing business. Guys, here that company should be engaged only in the manufacturing business and research related to that business and distribution of product manufactured by that company. So what I'm saying that company should engage in only three activity. One is the manufacturing business, second is research related to that business, and third is the distribution of the product produced by that company. Now one more point, guys. Lawmaker says that this business will not be treated as manufacturing business. One is the development of computer software is not a manufacturing business. Mining is not a manufacturing business. Conversion of marble block or similar item into the slab is not a manufacturing business. Bottling of gas into cylinder is not a manufacturing business. Production of the movie or printing of the books is not a manufacturing business, or any other notified business is not a manufacturing business. So what I'm saying that development of computer software is not a manufacturing business. Mining is not a manufacturing business. Conversion of marble block into slabs or tiles is not a manufacturing business. Printing of books or production of movies is not a manufacturing business. But wait a minute, electricity generation will be treated as manufacturing business. Electricity generation will be treated as manufacturing business. Point number 6 says that company cannot claim the 10AA deduction, additional depreciation, 33AB, ABA. After that, scientific research related donation deduction is not available. 35AD not available. 35CCC not available. 35CCD is not available. Under chapter 6A, any deduction is not available except two deduction is available. One is the 80JJAA is available and one is the 80M is available. So 80JJAA is available and 80M is available. Other than that, any deduction under chapter 6A not available. One more point, guys, if any losses or unabsorbed depreciation due to this section, then obviously it cannot be set up and carry forward. But obviously in the practical life, this will not be any situation. Now next part. Lawmaker says that if company want to opt this section na, then company has to file one form, that is form number 10 ID, up to the due date of return filing of the first return. Means suppose company is incorporated, in that year company will file the first return. In the first return only, company has to opt this section. In the first return only, company has to opt this section, then only this benefit of 15% is available. Otherwise 15% benefit is not available. And once company opted this section, then this section is applicable for subsequent years also. Means subsequent years also, this section is applicable, this benefit is available. Now one more point, lawmaker says that suppose in the subsequent year, if any condition is not satisfied, then if any condition is not satisfied in the subsequent year, then company will be come out from this section and normal provision will be applicable. But here lawmaker says that suppose if there is a violation of condition number 3, 4 or 5. 3, 4 or 5 means 3 means that plant and machinery is like, suppose there is a second hand plant and machinery, or fourth is condition is like building they have used earlier, it was used as hotel or convention center, or their business is not a manufacturing business, then they can opt out from 115BAB and they can opt the 115BAA of the 22%. Means they can come out from the 15% and they can opt the 22% tax rate. You got my point or not? Yes, this is all about the section 115B. AB. Now guys, we'll discuss 115 BAC after some time, but before that there is a one section BAD. Now guys, this 115 BAD section is basically exactly replica of 115 BAA. 115 BAA, you know that in case of domestic company that 22% tax rate, here it is for the resident cooperative society, tax rate is 22%. Here it is for resident cooperative society, because cooperative societies normally they are having that slab rate of up to 10,000 10%, 10,000 to 20,000 20%, more than 20,000 30%. So for that company, guys, for the company, sorry, for cooperative society, that is the tax rate. But for the resident cooperative society, they are having the alternative taxation regime and just pay the taxes at the rate 22%. All other provisions are similar to the 115 BAA. So here if you read that, it is similar to the 115 BAA. Now guys, in the same line, there is a one more new section introduced by the Finance Act 2023 only from assessment year 24-25. There is a one section 115 BAE. And this 115 BAE is basically similar to the 115 BAB. 115 BAB was applicable to new domestic manufacturing company. This section is applicable for the new manufacturing resident cooperative society. And that cooperative society, resident cooperative society, set up and registered on or after 1st April 2023, and they started the manufacturing business till 31st March 2024. Their tax rate is 15%. All conditions are similar. Everything is similar, but there is a, you know that in that 115 BAB, there was a one condition that they cannot use any building which was earlier used as hotel or convention center. That condition is not applicable here. That condition is not applicable here. All other conditions are similar only. If you read the 115 BAE, you will able to. After company and cooperative society, now next special tax rate or alternative taxation regime for the individual HUF, AOP, BOI, artificial juridical person. So guys, there is a one section 115 BAC. This 115 BAC section says that tax on income of individual HUF, AOP, BOI, artificial juridical person, and there is an amendment in this section from assessment year 25-26. Now guys, this section is applicable to individual HUF, AOP, BOI, artificial juridical person, but other than cooperative society. Obviously for the cooperative society there is a 115 BAD BAE na. So for cooperative society this is not applicable, but other AOP, BOI, artificial juridical person, individual HUF, it is applicable. Now as per this section guys, your tax rate is up to 3 lakh, there is no tax rate, that is the slab rate. 30 up to 3 lakh there is no tax. Now 3 lakh to 7 lakh there is an amendment, because till last year what happened, it was a 3 lakh to 6 lakh, 6 to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakh. But here up to 3 lakh is no tax. 3 lakh to 7 lakh there is a 5%. 7 lakh to 10 lakh there is a 10%. 10 lakh to 12 lakh there is a 15%, and 12 lakh to 15 lakh there is a 20%, and more than 15 lakh it is a 13%. So what I am saying that up to 3 lakh there is no tax. 3 lakh to 7 lakh 5%, 7 lakh to 10 lakh 10%, 10 lakh to 12 lakh 15%, 12 lakh to 15 lakh it is 20%, and more than 15 lakh it is 30%. So remember, here there is a up to 3 lakh there is no tax. After that there is a gap of 4 lakh. After that, there is a gap of the 3 lakh. After that, there is a gap of 2 lakh. And after that, there is a gap of the 3 lakh. So up to 3 lakh, there is no tax. 3 lakh to 7 lakh, 5%, 7 lakh to 10 lakh, 10%, 10 lakh to 12 lakh, 15%, 12 lakh to 15 lakh, 20% more than 15 lakh, 30%. Now guys, here, this is the slab rate in case of 115 BAC. This is amended by the Finance Act 2023 on, sorry, 24 only. Now guys, remember, sir, okay, this income, like your income is taxable as per this slab rate. What about the special rate of income? Like LTCG, STCG, 111A, winning, sir, how that special rate of income is taxable? Guys, special rate of income will be taxable as per the special rate only. As per special rate only. Now question is that, okay, sir, is surcharge is applicable or not? Surcharge is applicable or not? Because guys, in the last 4 alternative taxation regime, 115 BA, 115 BA, 115 BAD, BAE, what we have mentioned, that 10% is a surcharge always. So is here also the 10% surcharge always? Answer is no, guys. Here in this particular section, your surcharge is depends on the your total income. Here surcharge in case of individual HUF, AOP, BOI, artificial juridical person, surcharge depends on the total income. If total income is up to 50 lakh rupees, there is no surcharge. If total income more than 50 lakh to 1 crore, surcharge is 10%. More than 1 crore up to 2 crore, surcharge is 15%. More than 2 crore, surcharge is 25%. Guys, here 37% surcharge is not applicable. So here 37% surcharge is not applicable. In any case, 37% surcharge is not applicable. So if you opted the 115 BAC na, then 37% surcharge is not applicable. Maximum surcharge can be the 25%. But sir, we have discussed that in case of special income, that maximum surcharge is 15%. So is that concept applicable here also? Answer is yes. So that maximum surcharge applicable at the rate 15%, that concept applicable here also. Okay? So don't worry, in case of that 4 special type of income, whatever the tax on that maximum surcharge is the 15%. Now guys, when you opt the 115 BAC, then obviously AMT is not applicable. Alternate minimum tax is not applicable, like in the 115 BAA and MAT is not applicable. So in the same line here, AMT is not applicable. But what about sir AMT credit? If any AMT credit is there, so what will happen with that AMT credit? That is going to be lapse. That is going to be lapse. Now guys, there is some interesting point here. Try to understand. Here try to understand. I am saying that okay, this is the slab rate, but this is the very good slab rate. Because normal slab rate, what we have discussed, that up to 2,50,000, there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. But so here it is a very good slab rate now. But guys, if you want to follow this section now, then you have to sacrifice something. You have to sacrifice something. You have to sacrifice some benefit, deduction, exemption and all. What we have to sacrifice? So first is guys, assessee does not claim the following deduction or exemption. First is under the head house property. You know that if there is a self-occupied property, then on the self-occupied property, you can claim the interest deduction of the 2 lakh rupees or 30,000. That is not allowed. So in case of the self-occupied property, that 24B, that interest of rupees 2 lakh or 30,000 can be claimed as deduction. That is not allowed. Second is, guys, suppose if there is a laid out property or deemed to be laid out property, and under house property, if there is any loss, under the head house property, if there is any loss, so normally what happens, house property head loss can be set up against any other head also up to the 2 lakh rupees. But guys, that benefit is not available. So whatever the house property head loss, that is not allowed to be set up against any other head of the income. And guys, this house property loss, that is not allowed to be carry forward also. This house property loss is not allowed to be carry forward also. This house property loss you cannot carry forward. It is going to be lapse. So what I am saying, that in SOP obviously interest is not allowed, so there will not be any loss and all. But in case of the LOP and DLOP, laid out property, deemed to be laid out property, if there is a loss, that loss not allowed to be set up against any other head, and guys, that loss not allowed to be carry forward also, means it is going to be lapse. Now, if we see from the salary perspective, so remember guys, in head, under the head salary, there is an entertainment allowance deduction. And that entertainment allowance deduction, if you remember little bit from your intermediate, then it is allowed to the government employee. So that entertainment allowance deduction is not allowed. That professional tax deduction, professional tax, whatever you pay, employee can claim the deduction under section 16, clause number 3, that is not allowed. But guys, there is a one benefit of 115 BAC. You know that there is a one standard deduction of the 50,000. There is a standard deduction under section 16 is a 50,000. Now, If you follow the 115 BAC now, if you follow the 115 BAC, then guys, this standard deduction of 50,000 is raised to the 75,000. That is amendment from this year. So normally standard deduction is available 50,000, but if you follow 115 BAC, then this is the beneficial. Your standard deduction under section 16 is raised to the 75,000. Now it is available 75,000. Now under the head salary, guys, we are discussing that this benefit are not available. Entertainment allowance deduction not allowed. Professional tax deduction not allowed. Leave travel concession means when you are going to visit any place and your employer is paying that flight ticket and all economy class. So that deduction, that exemption was there 10.5, that is not allowed. Guys, that HRA exemption is not allowed. HRA means house rent allowance. So normally what happens, if you receive the salary, then against salary, and if you receive the HRA, then from HRA you can claim the exemption under section 1013A, and that exemption is 40% or 50% of salary, or rent paid minus 10% of salary, or actual amount received, whichever is lower is the exemption under section 1013A. But guys, this HRA exemption is not available if you follow the 115 BAC. After that, guys, any allowances exemption is not available. Allowances exemption, if you remember from intermediate, there was children hostel allowance, that exemption was 300 per month per child, maximum 2 child. Children education allowance 100 per month per child, maximum 2 child. So that all allowances exemptions are not allowed. All allowances are taxable, exemption are not allowed. But guys, there is a one exception, that is the DTDC. This 4 allowances exemption you can claim. 4 allowances exemption you can claim, that is DTDC, means to the Divyang employee. Divyang means to a handicap employee. Guys, if there is a handicap employee, then he can claim exemption for the transportation allowance, or it is known as the commutation allowance. And that exemption is a 3,200 per month. So 3,200 per month, that exemption is still available even you follow the 115 BAC. So even you follow the 115 BAC, then also for the Divyang employee, that 3,200, that exemption is available. After that, traveling on tour allowance, daily allowance and conveyance allowance. Guys, traveling on tour allowance, daily allowance and conveyance allowance, in these 3 allowances, exemption is allowed to the extent amount actually spent by the employee. So to the extent amount actually spent by the employee, so guys, whatever amount is spent now, so that is exempted. So that exemption still can be claimed. So guys, here remember, this benefit can be claimed. Now one more point, remember that one more point, guys. If you remember, then under the head salary, you know that there was a, if any lunch is provided in the office, then meal value is up to 50 rupees, then it is totally exempted. So that 50 rupees exemption also not available. So you can write that here, a free meal benefit up to 50, normally it is exempted. But guys, if you follow 115 BAC, then that free meal benefit 50 rupees exemption not available. Now guys, under the head PGBP, that 10AA is basically deduction under chapter 6, that 10AA SEZ deduction not allowed. After that, additional depreciation not allowed. 33AB ABA not allowed. Donation related scientific research deduction not allowed. 35 AD not allowed. 35 CCC not allowed. Under income from other sources, guys, whenever minor income is included in the income of parents, then parents can claim one exemption under section 1032 of rupees 1500 per year per child, maximum unlimited child. So guys, that 1032 exemption is not available if SSC follow 115 BAC. One more point, that allowances of MP MLA under section 1017, normally MP and MLA receive the allowances now, that is constituency allowance and daily allowances, that are exempted, but this exemption not available. After that, guys, under chapter 6A, any deduction not allowed. Under chapter 6A, any deduction is not allowed. But guys, this 4 deduction are allowed. One is the 80JJAA, that new employee recruited. One is the 80CCD2, CCH2 and 80LA, that is allowed. 80JJAA is a new employee recruit, that 30% of salary. 80LA is the IFSC located unit. After that, 80CCD and 80CCH is, suppose if your employer contributed to the new pension scheme, or here under 80CCH2 is if employer contributed to the Agniveer, that Agnipath scheme, then first it is taxable under the head salary, and after that you can claim deduction under section 80CCD2 and 80CCH2. So guys, this all benefits are not available. So can I revise again? So guys, in under house property, in case of the self-occupied property, that interest deduction not allowed. Under let-out property, if there is a loss, that is not allowed to be set off against any other head. If there is any remaining loss, that is going to be lapse, it is not allowed to be carry forward also. In case of the salary, that entertainment allowance not allowed, professional tax deduction not allowed, leave travel concession, HRA exemption not allowed, any allowances exemption not allowed, except DTDC is allowed. Under PGBP, 10 AA not allowed, additional depreciation not allowed, 33 AB, ABA not allowed, scientific research donation related deduction not allowed, 35 AD not allowed, 35 CCC not allowed. Under IFOS, that minor income is included in the income of parents, then 1500 exemption not allowed. Daily and constituency allowance exemption for the MP MLA, that is not allowed. Deduction under chapter 6 is not allowed. And guys, there are 4 is allowed, that is 80 JJAA allowed, 80 CCD2 allowed, 80 CCH2 allowed, and 80 LA is allowed. Done. Okay, guys, one more point. If there is any losses or unabsorbed depreciation due to all this benefit, guys, if there is a losses or unabsorbed depreciation due to all this section, then that losses or unabsorbed depreciation is going to be lapse. And assessee cannot set up and carry forward that losses. So suppose if there is a 35 AD business loss, that is going to be ignored, means it is going to be lapse. One more point. Guys, under house property, if there is any loss of earlier year, that is not allowed to be set up. If there is a house property loss of any earlier year, that is not allowed to be set up. That is also going to be lapse. Okay, one more point. Guys, normally what happened? Whatever for that alternative taxation regime we have discussed, 115 BA, 115 BAPE, 115 BAD, 115 BAE. Guys, under those section, what is written? Okay, if you wish to follow those section, then you have to file one form up to the due date of return filing. Then only you can opt those sections. So can I say that those sections were alternative taxation regime? Means normally you have to go with the normal provision, but if you wish to follow that alternative provision, then you have to file one form. But guys, here 115 BAC is a different. 115 BAC says that this section is your default taxation regime. This is your default setting. This is your default taxation regime. Means if you not do anything, then you are going to pay the tax as per this rate. This is the default taxation regime. But guys, if you don't want to follow this section, then you have to opt out from this section up to the due date of return filing. So up to the due date of return filing means when you are filing the return on time only, then you can opt out from this section and follow the normal provision. But if you are filing the late return and due date is already gone, then guys, you have to follow this section. There is no option of opt out. So what I'm saying that normally this section is a default section. Means if nothing is given, then you have to follow this section. But guys, if you wish to opt out, then you can opt out from this section and follow the normal provision, but you have to opt out up to the due date of return filing. But guys, remember here, sir, is every year we have the option? Answer is yes. Every year you can choose to follow the default taxation regime or opt out from default taxation regime and follow the general provision, normal provision, that 2,50,000 slab rate and all. But guys, there is a one exception. Suppose if you are having the PGBP income, if you are having the PGBP income, if you are having business income and you opt out from 115 BAC, then every year you have to opt out only. Means you cannot follow the 115 BAC. But then suppose what I am saying, suppose you are having PGBP income and you opt out from 115 BAC and you are following normal provision, you are claiming additional depreciation and all, then you have opt out from 115 BAC means normal provision is applicable. So for the subsequent year also normal provision have to follow. But in any year, suppose if you opted 115 BAC, in any year, suppose if you opted 115 BAC, then guys, you cannot opt out till the time you are having that business. So till the time you are having the business income, you cannot opt out. You got my point or not? Yes. One more point. Last point, guys, that is related to the rebate under section 87A. So 87A rebate is basically available in that provision, normal provision, what we have discussed. In case of resident individual, if your income is up to 5 lakh, then that rebate is available is 12,500 or tax whichever is lower. Guys, here this rebate is available. So in case of resident individual, if your income is up to 7 lakh, then this rebate is available of rupees 25,000 or 100% of tax whichever is lower. But guys, here marginal relief is applicable. So for an example here, first we will discuss, there are lots of examples. Suppose there is a 7 lakh your income. So on your 7 lakh income, then this rebate is available. Answer is yes. How you will calculate the tax? So you will calculate the tax 7 lakh. So up to 3 lakh, there is no tax. 3 lakh to 7 lakh, there is a 20,000 tax, and total 20,000 is your rebate because 100% of tax or 25,000, whichever is lower is rebate. So guys, there is no need to pay the tax. But suppose if your income is 7,20,000. So on the 7,20,000, how you will calculate the tax? So up to 3 lakh, there is no tax. 3 lakh to 7 lakh, there is a 5%. 7 lakh to 7,20,000, there is a 10%. So here, guys, your tax is a 22,000. Is the rebate is available? Answer is no. This rebate under section 87A is not available because your income is more than 7 lakh. But sir, here tax is at 22,000. Here they have introduced the marginal relief concept. And that marginal relief is applicable. How? Because suppose if your income was only 7 lakh, then can I say that there is no tax? Your income over 7 lakh is at 20,000. So just take the 20,000, continue whichever is lower, continue whichever is lower. So guys, automatically there is a marginal relief of the 2,000, and on this 20,000, just add the health and education cess. So 20,800 you have to pay to the government. You got my point or not? You understood my point or not? Yes, sir, we have understood your point. Done. Now guys, one more point. Here this marginal relief concept is applicable only when your income is up to 7,22,220. Means if it is between 7 lakh to 7,22,220, then only it is applicable. Otherwise, if it is a 7 lakh 30,000 or 27,000 or 7,50,000, then obviously this margin relief is not applicable. Done. If you read it correctly and if you do this question, you will able to understand. Okay, done. After that, 115 BAD, BAE we already discussed. Now guys, whenever you follow the 115 BAA, BAB, BAC, BAD, BAE, remember that MAT AMT is not applicable, and maximum depreciation rate can be the 40%. Now anyway, maximum depreciation is 40% only now. But guys, you know that there was one exception, that motor vehicle acquired in that previous year, I think 1920 or somewhere. And that time, if you acquired and using for hiring business, then depreciation rate was 45%. So that 45% is not applicable. Maximum depreciation 40% is applicable. Now guys, there are some other rates also. And here first is the 115 BB, that is related to the winning. So winning income is taxable at the rate 30%. After that, 115 BB is related to deemed income. Deemed income is that cash credit or that unexplained expenditure, unexplained investment and all. There are certain sections, 68 to 69D. Okay, suppose in your bank account, if you receive the 1 crore and you are not able to explain from where you got this money. So that income is taxable at the rate 60%, and 25% is a surcharge, 4% health and education cess. So effective rate is a 78%. Now there is a one more section, 115 BBF. 115 BBF is related to the royalty from patent. Guys, this section says that, okay, suppose if any person is a resident in India, and that person invented something. That person is a first and true inventor, and he invented something, and after that that invention made the patent in India. And guys, if any royalty received on that patent, then that royalty is going to be taxable only at the rate 10%. That royalty going to be taxable only at the rate 10%. But here condition is assessee should be the resident in India. Second condition, that patent developed in India. That invention was developed in India, and developed in India means 75% expenditure on the development is incurred in India. And guys, if you wish to follow this section then you have to exercise this option up to the due date of return filing under section 139(1). And guys, if you follow this section then obviously any deduction and all is not available against that royalty. That royalty, gross royalty, will be taxable at the rate 10%. That 80 QQB and that RRB. So 80 RRB deduction is not available. 80 RRB deduction normally available, but guys, if on the patent, when you are opting this particular section, then 80 RRB is not available. But there is a one system, suppose if you opted this particular section 115 BBF for the 1 year, then for the next 5 year also you have to follow this section. And in the next 5 year, if you have failed to follow this section in any year, then guys, in violation year and in the next 5 year, you are not eligible to opt this particular section. It is like a 44 AD. After that, if you sell the carbon credit point, then guys, this carbon credit point sale income is taxable under the head PGBP, but here tax rate is a special tax rate 10%. In case of the online gaming, so suppose in case of the winning from the online gaming, it is taxable at the rate 30%. So winning from the online games is taxable at the rate 30%. How it will be computed, so that we will discuss in the TDS topic. Now guys, in case of this all special income is from the winning. In case of all this special income, any deduction of expenditure is not available. Any deduction under chapter 6A is not available, as well as guys, against this special income, basic exemption is not available. But there is an exception, is the section 112 long term capital gain, 112A and 111A. Against that you can claim the basic exemption in case of the resident, individual and HUF. Otherwise this basic exemption is not available against this special income. Now last concept of this particular topic is a diversion of income by overriding title and application of income. Now what is the diversion of income? So guys, suppose if there is any income, and at the generation of income, at the source of income only, due to any law or due to the any agreement, If there is a condition that this income has to be paid to any other person, then it is known as the diversion of income by overriding the title, and that income will be taxable in hands of that person only. Suppose for an example, here we have given one example. There is a partnership firm. In that partnership firm, there are A, B, C. Three are the partner. Now in the partnership deed, it is written that suppose if there is a death of A, then whatever profit of the partnership firm, 20% profit directly will be paid to the wife of Mr. A. So wife of Mr. A, so suppose Mr. A died, in this particular case, whatever the profit of the firm, then 20% profit has to be paid to the wife of Mr. A. So guys, there is a diversion of income by overriding the title. It means there is a condition at the source only. At the income generation only, there is a condition by the agreement or law. So guys, this 20% income will not be taxable in hands of the firm. This 20% income will be taxable in hands of the wife of Mr. A. But guys, there is a one concept is called application of income. Means first you generated the income, and after that there is a you apply the income. So obviously that income will be taxable in your hand. Suppose in case of the divorce, like court says to the husband that whatever income you earn, just pay the 50% to your wife as a alimony. Now in this particular case, husband is working somewhere and husband is getting the salary. So here whatever salary he got, after that he has to pay to the wife. That is called application of income. So whatever salary income, that is taxable in hands of that assessee only. Now suppose there may be possibility he told to his employer to pay some amount to my wife directly. Even he is paying directly, but this like binding, or it is not like you can say that it is a condition is not created at a source, so that total salary will be taxable in hands of husband only, and guys, it will not be taxable in hands of the wife. That is called your application of income. So here guys, two examples are given. If you read it, then you will able to understand. So this is the completion of topic number 1. Now guys, in the topic number 1 you can do 2-3 simple questions, but guys, don't do that 115b. Yeah, in the topic number 1, if I show you which question you can do. So guys, if you are having the compiler, then in the topic number 1 you can do the question number 1, that is question number 1, question number 2, question number 3 also, question number 4 also. Just do it because that is related to 115 BAC and non 115 BAC. Just do it. But here just make one small correction. Set top and carry forward not allowed. Okay. After that, in the question number 5 also you can do. But question number after 5, question number 6 and question number 7. Question number 6 and question number 7 and question number 8, I think. Question number 8. This 3 question you can do after PGBP because there are lots of amendment or adjustment related to PGBP. So this 3 question you can do after the completion of PGBP, but remaining 5 question you can do now also. Okay. So okay. So thanks a lot people. That's enough for today from my side. Now see you in the next revision lecture. Bye. Take care. Bye.